Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, July 26, 2016, and this is the Daily Report for Gold and Silver. We do have gold trading nominally slightly higher on the day, 13.2010. Puts it up just under $1 on the day. It opened at 13.15, went to a high of 13.24, low today 13.13 and change. Silver also trading higher on the day. Net change up about 11 cents, 0.57 or almost 0.6%. Trading currently at 1962 with a low of 1945 and a high of 1974. You know, traders, I have been charting the markets and have been a technical analyst for the better part of 30 years. Of course, the first 10 years, I was absolutely a green pea, just getting to understand technical analysis. But my point here is that the longer I do this, the more I am fascinated by how well different Fibonacci levels can anticipate different areas that we can look for to find either support or resistance. There's absolutely no doubt we know that nature is built upon building blocks that can be described through the mathematics of Fibonacci, the Fibonacci sequence, and Fibonacci retracement. That 0.61 is so critical in how all the building blocks of nature itself, but what's even more fascinating is just how well they kind of click into analysis of financial markets. And I draw your attention to the fact, and you're well aware of this, that we've been plotting this area at 13.15 for quite some time, ever since we really hit these tops, had a defined bottom, and actually could put in place this fib retracement, which covers this particular rally here. Now, once again, very, very slight movements today. It is a green candle, so in terms of the open to the close, we absolutely have a higher close compared to the open. Small-bodied candle, but once again, this particular price point has been an area that, at least on a tentative basis, this market is attempting to consolidate and either find support and move up or not find support. In other words, have the inability to bounce off of this and break through. In that case, we would look for the market to go to the next level of 1300. Now, how would we know, in fact, that what we're looking at is a bottom in the market and, in fact, it's safe to go back into the water, so to speak? Well, the downside of technical analysis, of course, is that I'm not going to be able to give you any kind of a forecast, obviously, until after we get that V. In other words, the market coming down is our first sign. Hitting a certain area, that's something we look for, but then we've got to see that bounce, that V, and it's that key reversal area that really tells us that something is going on. We've had a reversal of trend. Now, at what point would we decide, in other words, how high do we have to see this market bounce before we can say that we have technical evidence? And once again, we rely on our fib numbers. It would have to move past 1330. And if we look at the basic trading range that we've seen with the lows at around, 13.15 and the highs just above, but the bodies all within this particular consolidated price point, meaning between a $15 range between 13.30 and 13.50, I'd like to see it either A, break above this price point. That would certainly tell us that this wave 4 has ended, or if it cannot hold this particular price point and move lower, to see if in fact it runs to the 61% retracement area. All in all, Fibonacci has these techniques have been able to guide us in a profitable manner, and day after day I am amazed at how, when we set prices, and it's not us, it's simply looking at these fib numbers of, for example, here 13.15, and lo and behold, it tends to trade within that range, and it tends to show us a real defined level that we can look to see if the market's either A, consolidating, or B, really consolidating and getting ready for that key reversal. As I said the other day, I believed at that point that the probability was at about 30%. Given the fact that we have seen this market for another couple of days, close above this price point, that 30% is probably at about a 45% in terms of what we're looking at in terms of probability. And traders, lastly, want to look at a daily chart, but this daily chart is in Japanese average format. We want to get cues to see how this downtrend is performing. Absolutely no doubt. We see this market weakening now. We have now experienced these upper wicks, small body size. Of course, we haven't seen, these are the beginnings of a pivotal candle, but we really need to see it go green, of course, before these will show us that we have really seen some sort of a key reversal. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.